All right, the Fed just cut interest rates by a quarter point, first cut in 9 months. Mortgage rates didn't drop dramatically because this has already been priced in for the last few weeks. The market expected it. The bigger story is the Fed is signaling for more cuts later this year, probably October and December, as they respond to a slightly weaker job market and they want to keep the economy stable. So for housing, lower rates means more affordability. Here's a concrete example. Back in May, when rates were around 7%, a $500,000 home had a principal and interest of about $3,300. Now with rates in the low sixes, you're looking at a payment just about $3,000, so it's a savings of $300 a month for the same house. That's extra cash in your pocket, or maybe the ability to afford a slightly bigger home. That's why even a quarter point difference from the Fed funds rate can make a meaningful difference in real estate over time. And one of the things I'm seeing out there is buyers claiming that home prices are down. It doesn't mean houses are losing value. Often it's just the median price, what buyers are actually purchasing on average. Smaller, less expensive homes. And oftentimes the homes come on the market overpriced to begin with. Other trends are telling us the market is stabilizing. Mortgage applications are climbing, especially refinances. People take advantage of lower rates. In the past week, refinance applications jumped nearly 30%. So buyers are desperate to take advantage and reach some savings. Call me for that, by the way. Inventory has increased roughly 25% year over year, giving buyers more choices without flooding the market. Home price growth, it's slowing but still positive nationally, around 1 to 2% year over year. So values aren't collapsing, they're just leveling out. Adjustable rate mortgages, they are making a comeback. Now about 13% of new loans are ARMs as borrowers look for lower initial payments in this market. And here's something I talk about with my buyers all the time. The monthly payment is what matters, and it's not just about interest rate. It's also about the loan amount. How much house are we buying? People sometimes just see the rate and think, oh, that's so high. But if you're borrowing $1 million, your payment's going to be pretty decent no matter what the rate is. So the context of the purchase is critical. The lower rates help affordability, but the size of the loan actually has a huge role in what you end up paying each month. So what does that all mean? Buyers, rates turning lower increases your purchasing power, monthly payment is lower, more homes fit into your budget, and you've got more options than a few months ago. If you haven't updated your pre-approval in the last month or so, reach out to your lender, or just come to me for a better one, and see what your updated numbers look like. For sellers, the demand is solid. Buyers can qualify for more homes with lower rates, which helps support the value and keep the market healthy. So the bottom line, the Fed is easing a bit. Mortgage rates have come down, affordability is improving, and the market is stabilizing in a way that's healthy for buyers and sellers. So don't just get lost in the rate. What do you want to pay monthly? Who's in your corner? And make sure you're getting the best advice. Reach out to me. I'm happy to help buyers across the country. 808-721-1071.